Today's highlights: new whale break-even pressure combined with tightening spot liquidity. Why has 100,000 become a key resistance level for Bitcoin? With a 30% pullback and a decline in active addresses, is this round of Bitcoin correction considered a healthy shakeout? The 4,100 Bitcoins from Mt. Gox's so-called ghost funds, will they continue to put selling pressure on the market? That's a question. Friday, December 26th. This is BitcoinTV Chinese channel. Where is the lotus? I'm Michael. Now let's look at the most important data from the crypto world over the past 24 hours. In fact, this round of market movement isn't mysterious at all. We've been breaking it down for a long time from various angles. But the real key isn't about how the candlestick patterns move. It's about understanding exactly where the money is getting stuck. Let's take a look. Bitcoin has been struggling around the $100,000 mark for a very long time. To put it plainly, this generation has gathered a new batch of whales and their cost basis. Whenever the price reaches this level, all the hedging, risk control, and stop-loss orders come out at once, so the price at 100,000 moves neither too fast nor too slow. Looking further, the average holding cost for all Binance users is about $56,000. This is currently the last layer of foundational liquidity in the market, so as long as the price stays above 56,000, the overall structure can't really be considered broken. Looking further down, let's look at the average holding cost for long-term holders, which is around $40,000. These people basically have no emotions and no pressure. They're the ones who won't budge no matter how you draw the chart. That's exactly why the current market isn't the end of a bull run, nor is it a crash. It's a classic period of position rotation. The people at the top want to get out, those at the bottom aren't in a hurry, and the ones in the middle are still hesitating. So what truly determines Bitcoin's direction has never been a particular candlestick, but rather who chooses to keep holding at which position and who decides to exit. As long as this structural layer isn't broken, Bitcoin will just keep moving at its own pace. Right now, Bitcoin has gradually calmed down from its previous high state, but as for calling it a bear market, we don't agree with that. The Advanced Sentiment Index has already retreated from the previous state of euphoria back to a normal range. It's like everyone has had a bit to drink but is starting to sober up rather than experiencing a collective collapse. History has repeatedly shown that once emotions reach their peak, it's usually not followed by another surge, but rather a pause to catch a breath. This current pullback actually seems to be cooling down and releasing some of the market's heat. The key point is that this cooling off period hasn't turned into a collective panic or a rush to exit. The crowd isn't stampeding for the exits. Instead, people are sitting down to recalculate and cool off, so prices are moving a bit more slowly, fluctuating sideways. Essentially, this is about digesting the previous gains and building a new consensus. In the context of the market cycle, this is a halftime break for the trend, definitely not the end of the show. In other words, this isn't a plot twist, but rather a breather at halftime. How the next act unfolds depends on whether trading volume can pick up. Looking at the current market, we're in a stage of digesting the earlier moves. After Bitcoin's recent drop, it's now stuck fluctuating within a range. On the surface, it seems listless, but in reality, most short-term traders are collectively taking losses. Data shows that the proportion of short-term holders, the STH ratio has been below 1 for several weeks now. The meaning is straightforward. A bunch of people are selling their coins with tears in their eyes, almost being forced out. But interestingly, this kind of selling pressure isn't a panic-driven rush for the exits. It's more like a passive liquidation after the emotional tide has receded. In fact, the real big players and seasoned veterans are barely moving at all. Hardly any old coins have flowed out, which shows that the core holdings are still lying there securely. In other words, the whole market isn't collapsing right now. It's just the short-term traders who can't hold on any longer. In other words, this looks more like a period of rotation rather than the beginning of a market crash. The chips are being reshuffled, emotions are gradually cooling down, and the market is making room for the next phase. As long as the selling pressure continues to be absorbed and sentiment gradually recovers, this seemingly dull period of consolidation could very well be the build-up phase for the next round of market action. Alright, please give us a like and turn on the notification bell. For those who have just started following our channel, let me explain. Our channel focuses on daily news across the entire Web3 space. All updates on sentiment, policy, and fundamentals will be covered for you within 15 minutes. So by watching us for 15 minutes each day, you'll gain an intuitive understanding of Web3 and the crypto space. If you're new to the industry, this kind of understanding will help support you in making rational decisions in the future. Let's take a look at today's headlines. To be honest, the market has been a bit quiet this year, hasn't it? Bitcoin is still hovering around $87,000, not really dropping or rising much. As for Ethereum, it's been steadily sitting near $2,900, with the market as flat as a straight line. But in previous years around this time, the Christmas holiday season should have already kicked off, right? At the very least, there should have been a dip, but the market is unusually quiet. Hot money has disappeared, and short-term traders have exited. The whole market feels like it's holding its breath. Is it really all over? Or is the market gathering strength for the next big move? Right now, no one dares to make any bold claims, but one thing is certain: this kind of quiet is anything but simple.
On-chain data continues to weaken, with active addresses down 22% from the October peak. But long-term holders are still increasing their positions. Meanwhile, Bitcoin has pulled back about 30% from its $126,000 high, which happens to fall within the typical 25% to 35% correction range seen in the middle of historical bull markets. This round of pullback has effectively squeezed out excessive leverage, bringing funding rates back to a neutral range.
Across the world, we're really seeing growth across a range of different use cases. So it's a truly exciting time. Cryptocurrency markets are no longer the sole focus, and we're starting to see crypto infrastructure being used as the foundation for a future financial system.
Research indicates that the target price for Bitcoin for 2026 is $130,000 to $150,000. This is due to compliant capital channels, such as spot ETFs, absorbing Bitcoin supply, with limited new supply, creating a structural supply-demand imbalance.
To be honest, this current market trend is actually pretty boring. But do you know what mistakes are really easy to make during such a dull market? The first is thinking that since there's no volatility, there are no opportunities. So you keep buying high and selling low, trying to trade the swings back and forth, only to end up worn out by the cost of time. Another mistake is letting your emotions completely take over, misreading a sideways market as the end of a trend and getting out too early. So history has repeatedly proven that real major market moves never start with a frenzy, but rather emerge from a period of quiet that tests your patience. If you're hoping to bet on a big breakout candle right now, this really isn't the time for you. But if your goal is to follow the trend through the entire cycle, then let me tell you, right now is the stage with the lowest risk, the least noise, and the least likelihood of being shaken out of your position. To be honest, the market was just worrying about why such a grand opportunity felt so quiet, and then suddenly, the oldest ghost story in the crypto world came back to life. What do I mean? Do you remember the Mt. Gox incident in 2011 that shook the industry? In one go, 640,000 bitcoins were lost, an incident of the century. And now, those old wallets that have been dormant for over a decade have suddenly started moving again, like ancient tombs being pried open and old ghosts crawling out. So those stolen bitcoins from back then, which had remained untouched and silent, everyone thought they would just die on the blockchain. But recently, they've suddenly come back to life. Can you feel the tension? No one knows where these coins will end up. But one thing is certain: a piece of history that was buried by time has now re-entered the rhythm of today's market.
On-chain data shows that wallets related to the Mt. Gox incident have recently shown significant activity. In the past week, about 1,300 bitcoins have been transferred, and since October, a total of around 2,300 have been sold. Currently, about 4,100 bitcoins are still being held. The transfer pattern clearly shows a phased release, indicating a high level of planning. Some on-chain analyses suggest that these funds may have already been taken over by Russian federal security agencies. The continued outflow is creating additional selling pressure on the market as the year comes to an end.
Alright, since this batch of ghost coins is Russia's way of trying to resolve its international political troubles, it's being released according to a plan, neither in a rush nor too slow, but gradually. So in terms of price, this kind of one-off panic sell-off is even more torturous, because it constantly weakens the sustainability of any rebound. Every time the market just starts to move, just as it's about to take off, it gets pushed back down to the starting line again. So the current situation is essentially no longer about bulls or bears winning or losing, but rather the market matching up against time. As long as this batch of old coins hasn't been completely digested, it will be very difficult for the market to truly develop a smooth major trend. In other words, compared to short-term price fluctuations, the real turning point will be when this historical baggage is finally cleared out. That's when all the negative factors will have been fully priced in. Spot trading is quiet, but derivatives are having a frenzy, as the focus of the crypto world completely shifted. Valuations have plummeted by 72%, down to $2.5 billion. As for the NFT market, when will Lindong recover? 2025 will be over soon. This year, the crypto market in one sentence: derivatives are especially booming. Total annual trading volume is $857 billion. What does that average out to daily? Over $26 billion. So during that surge in October, derivatives trading volume shot straight up to a monthly active volume of $748 billion. The entire derivatives market suddenly became extremely lively. Looking at the pace, the trend in derivatives is also very clear. In the first quarter, it was still around $200 billion. In the second quarter, things started to pick up speed, and by July, August, September, and October, the volume had jumped directly to $300 billion. So now, the market is no longer about whether to buy coins or not, but about who is betting more aggressively in derivatives. As for spot trading, it can only sit on the sidelines and watch. But the real force that flipped the table in this round was derivatives.
The trading volume hit 85.7 trillion USD, with Binance leading at 25.09 trillion USD, capturing 29.3% market share. OKX, Bybit, and Bitget follow. The top four platforms control 62.3% of the trading volume, intensifying industry concentration.
In October, the path model showed that the crypto market's fundamentals and liquidity were still negative. Whether it was in the stock market in October or in India, as Pradeep mentioned, in October, there was a lot of liquidation happening everywhere, and that really dragged the market down. The lack of market stability in crypto is a decisive factor, and our liquidity is drying up.
The gap between the top and second tiers is widening rapidly. Gate's annual trading volume reached 5.91 trillion, but its market share dropped to 6.9%. Both BingX and Crypto.com saw their annual trading volumes fall below 1 trillion, accounting for a small market share. Top platforms absorbing liquidity have shrunk mid-tier market share to just 3 to 4%, increasingly marginalizing them.
There's no doubt that, even with your eyes closed, the market will continue to concentrate around the top players, leading to a situation where the strong only get stronger. Top exchanges like Binance, for example, are able to build an unshakable moat thanks to the depth of their liquidity, their established brand, and strong user loyalty. As for mid-tier and lower-tier exchanges, if they want to catch up, especially in the derivatives market, the competition isn't only liquidity. Key factors include risk control, brand efficiency, and users' long-term platform relationships. These are crucial competitive points. Let's take a look at the NFT market. Currently, the entire NFT market has shrunk to just $2.5 billion. Compared to the beginning of the year, when it was $9.2 billion, that's almost a 72% evaporation. And to make matters worse, the performance in December was even poorer. In the first 3 weeks, the trading volume didn't even reach $70 million. The market was already tight on funds, and once liquidity dried up, it became almost impossible for the NFT market to recover. At the beginning of the year, we were still hoping that the trend of collectible toys, like the Labubu Pokemon cards, would bring about a revival in the NFT market. But unexpectedly, what happened was that it rose quickly and fell just as fast.
As we entered December, the cooling of the NFT market had shifted from a trend to a reality. According to CryptoSlam data, the number of unique buyers plummeted rapidly from over 200,000 at the end of November to around 130,000, a significant drop. At the same time, the number of unique sellers fell by 35.6% year-on-year, hitting its lowest point since April 2021.
Opens is really focused on this idea of bringing crypto to a broader consumer base. And let's really provide a platform for those people that allows them to trade anything with complete ease. That's what we have in mind. That's our core business now.
Trading activity collapsed in tandem, with weekly transaction volume shrinking from nearly 1 million at the beginning of the month to less than 800,000. The simultaneous retreat of both buyers and sellers means the market is not just temporarily on the sidelines, but has entered a typical liquidity contraction phase. It's difficult to see an effective rebound in the short term.
To put it bluntly, this wave has been really tough for the established NFT projects. Among the top 10 by market cap, most have dropped by double digits in just a month. Even once top-tier projects like CryptoPunks and Bored Ape Yacht Club couldn't withstand it, with typical declines ranging from 12 to 28%. The blue chip aura simply didn't help at all. However, not everything in the market is falling. Those leaning more towards art, like Autoglass, have actually managed to hold their ground, with prices even seeing a slight rebound. Even more surprising is the new project, Suppose Robots, which shot straight into the top 10, with its floor price surging to $5,800. Its market cap reached $58 million. So this shows that even in a crypto winter, as long as your NFT has unique features, it can still break through in the market. Orion Express News.
Binance founder Zhao Changpeng came forward to reassure the market. This time, Trust Wallet was indeed hacked and lost about $7 million. But don't panic, the platform will fully compensate for the losses. The issue was that hackers infiltrated the browser extension update process, and the team is working overnight to investigate. Users don't need to worry about their assets. This time, silver is really not holding back. The price shot past $74, rising 3% in a single day, and has already increased by $45 this year. It used to be an overlooked underdog. Now its momentum is even stronger than many star assets. Gemini has also started accepting BitcoinTV. According to news on December 26th, this established exchange has officially launched Bitcoin trading. With the addition of custody services, this gives BitCoin yet another mainstream channel. This year, the US SEC has been mentioning the term blockchain so frequently that it's almost become routine. Just in August alone, it was brought up nearly 8,000 times. Bitcoin and spot ETFs have become the absolute stars, and the established asset management firms are collectively charging into the crypto space. USD made another strong move, surging past $3 billion in a single day with a 7.68% spike. This rally clearly doesn't look like it's just for show.
A good manager has a kind of invisible blessing, and in fact, many people only receive it when they're forced into it. Once you've truly gone head-to-head with genuinely rotten or bad people, you'll realize that the price you pay in that moment isn't small, but it's worth it. You might have been taken advantage of, hurt, or even set up. You start to question your life, but it's precisely this moment that suddenly wakes you up. Relationships between people aren't that simple, and the world isn't a fairy tale. So you begin to see the world more clearly, learn how to judge people, and understand what it means to keep a respectful distance. So in a certain sense, it's actually their malice that shields you from even greater harm. As Mo Yan once said, truly kind people often mature later because they have to be harshly schooled by reality before they can develop real wisdom and armor. None of this pain is suffered in vain. It all becomes the moat that protects you later in life. If you agree, feel free to give us a like. That's all for today's program. We keep you updated on all the news in the web, 3 world every day. Here are the member benefits we've put together, and we hope you'll consider joining as a member. Every Thursday is our regular members-only live stream. If you have any questions, we'll help you answer them, and together, we'll gradually improve. What's it like to have money? See you tomorrow.